Good morning, traders, and the opening bell rings. Well, what we have here is a gap down this morning. So the first order of business for the market is to try and fill that gap, to try to get back up to Friday's low at 50.13. We will, of course, be looking for resistance there if it does get to Friday's low for continuation lower. If the market fails to fill that gap, if we instantly get new selling, that would be more bearish as a gap and go. Or if it got to yesterday's low and it got resistance there and began lower, that would also be a gap and go, which would be bearish. The only thing this morning that is not bearish is if we fill the gap and then continue up into Friday's range. If we're able to continue up into Friday's range, well, then we got to see what happens from there and just start to test resistance levels to see how the market reacts to them. Okay? So no matter what, opening with a gap down is bearish to see. But that first order of business is to try and fill the gap. So let's just very quickly zoom out. We'll take a look at the monthly, the daily, and the weekly and give ourselves a little bit of context. I'll do it quickly here. First and foremost, on the monthly, we are trending higher. That is bullish to see. Whenever this momentum runs out, we should need to come back to the previous all-time highs around 4,800 to find support, but it doesn't matter until that momentum runs out on the monthly. And we've still got momentum. So it could go on for months and months for all we know. Looking at the weekly, we also have had a lot of momentum. But what are we noticing about the weekly that is different than the monthly? We had all this momentum for, 5 weeks straight. And then last week basically just engulfed the previous week. Now, we didn't technically make a lower weekly low, but we basically did. So that is, I would just call that an engulfing candle. And that basically is a sign that the momentum up over the last 5 weeks is coming to an end. Now, there are two ways the market could balance off that momentum. We could just go sideways at higher prices until we've spent enough time to continue higher, much like we did in here, right? We had all this momentum, went sideways, and then we were able to break higher. Or we may need a pullback with price, something that looks more like this right here, where the market has to pull back down with price. If that's the case, well, that would bring in those previous all-time highs that we talked about on the monthly. And then lastly, let's just zoom in and look at the daily real quick. We are seeing this as a balance area on the daily. So that increases the odds that on Friday, when we looked above and failed that balance area high, we were likely heading down towards the balance area low at 49, we'll call it 49.70. Okay? So that is bearish to see with no other information than that. But the fact that the market is in balance and it is heading from one end of balance to the other, and that right now the highest probability is that we're heading to the lower end of balance, that alone is bearish to see. So all we need intraday today to confirm that we should be getting short is to see what happens with the gap. Can they fill the gap? Can they get to yesterday's low? And if they do they get rejected lower? Or if they cannot, that is bearish to see. So at this point, I would describe this, so far, this first 3 minutes of the day as an attempt to fill the gap. So at any point from now on, if they pass back through the opening price at 5,002, I will be bearish for continuation to test the overnight low at 49.95, give or take. Okay? So first order business, filling the gap, watching for resistance. If they pass back through the opening price, bearish for continuation lower. Let's see what happens. Ooh, they took out some stops this morning. For anybody that is kind of confused about why I'm using Friday's low as a gap fill level, whenever the market has a day like it did yesterday where it's only open for a few hours and it's not a real, day, I just consider that all one big overnight range. So the latter half of Friday after 4 p.m., the trading over the weekend, the trading on Monday, and the trading last night, to me, all of that is just the overnight. I put that in one big category. So as far as the overnight is concerned, the gap fill is to Friday's low. Okay. So we can see this area right here in the overnight between 5,005 and 5,000 was acting as support. The market was trying to continue to hold itself up to prevent itself from going lower in there. So we should now assume that that is going to act as support once again. That would be the area between the halfback, which is currently at 5,005, and the opening price. We're going to assume there's buyers waiting there because we have not fully filled the gap. But if we pass back through that opening price, everything changes very, very quickly to become more bearish. Let's see what happens. Okay, so do we get some support here? Do we get a bounce, or do we pass through the opening price? What's it going to be, market? There you have it. Passing through the opening price is bearish to see. It increases the odds that this is a gap and go, which means it's time for me to put up the bearish banner. I don't know what's going on with my banners here. It won't change. That's weird. So anyway, that is now bearish to see. As always, these days, we tend to get what we call gap and chop, which is basically once the gap fill fails and the market passes back through that opening price becomes a magnet. So as the market goes lower, it pulls it back up. As it goes higher, it pulls it back down, and we're likely to kind of chop around in here. However, at this point, I am bearish as long as we remain below 5,008. Okay, because the higher probability is that we're heading for the overnight low. It may be a choppy trip to get down there, but the momentum is to the downside. We're feeling bearish because on the daily candles, we have a look above and fail that increases the odds that we're heading down to 49.68. We have a gap down, which is a sign of momentum this morning. And we now have a gap and go, which is a confirmation of that momentum. So even if the market chops here for a little bit, it has already given us the signals it wants to test that overnight low, and we should be bearish for that move. Once it gets to the overnight low, well, we got to see what happens down there. Do we get more new sellers? If so, we remain bearish. Okay, so a liquidation increases the odds of chop. They're dropping too far too fast. So if we get to that overnight low immediately, we will likely look below and fail, coming back up for the opening price. What does that mean when it comes to trading? Well, if I got short when the market broke below the opening price, the gap and chop tells me to immediately get my stop below my entry, so I can't lose money on the trade. And I would, because of this liquidation, take profits at that overnight low and then look to re-enter when the market comes back to test resistance, rather than staying in a short trade, assuming continuation lower, because we haven't had any chop. And so we will likely get a pullback up to test resistance. Happy birthday to Frito. I thought you were joking on Friday when you said that. When you said Monday was your birthday, I thought because it's President's birthday, you know. Anyway, happy birthday, bro. All right, so that is the test of the overnight low. So the next question we're asking ourselves is, what happens down here? Okay, they got to the overnight low, so they squeezed any buyers that were buying over the weekend. Now, do we get new sellers that pile in down here? What we're looking for is resistance. Because this thing liquidated down, I'm not exactly sure where it'll find resistance on the way back up. So I got three different levels of interest here. The first one is the overnight low. The second one is this little node of liquidity here at 49.97. And the last one is this node over here from the overnight at around 49.99. So I'm asking myself, where do those sellers step in? I would also say at this point, I would like the market, if I want to remain bearish, to stay below the opening price. If they are able to pass back through that opening price once again, they will likely fill the gap. The sellers have taken control of the market. They need to maintain in control from here on out, keeping the market below that opening price. Man, instant resistance right at the overnight low. Bearish to see. Good morning to Will, Juan, Willie T, Percy R, David G, Mark, Ships, Tim, Alyssa, Grizzly Bull, Bust a Move, Debbie B, Philip. Thank you so much, Juan. Appreciate that. Nicholas is here. Jay in the house. Another day in paradise. Vu, good morning to you. 200 dogs, Arjit, and Bill. Welcome to Bill. If you have not yet, we are on the public stream. Please smash that thumbs up button. Those likes really do help out to bring in some new traders. Tell the old YouTube algorithm they ought to send some people our way. Got 115 people hanging out. Let's see if we can beat 75 likes. Can we do it? So one thing that we like to watch is the volume profile and how it's tapering off at the lows. This could look like good taper, but it in fact is not. Jumping from 9,000 contracts to 3,000 to 900, that is too sort of extreme of a sell-off there and increases the odds that the market needs another push lower. that we likely have not run out of sellers yet. So again, we're watching the resistance at that overnight low. Can they hold it? If so, they'll come back for that low of the day. A 7 Mile Reach says some low volume pockets left behind. Yeah, they can come back for those. But remember, they don't have to. Our definition of low volume on the ES is less than 200 contracts inside the range, and they've all got more than 200. So they don't have to come back for them. At this point, the sellers are in charge. Again, terrible taper at the low. That's some bot shenanigans happening down there. What do you mean by that? What do you mean bot shenanigans, Charles? Well, it just means that I believe that the computers brought the market down here and then just went sideways in this very, very tight range purely to convince traders to go long. So they can get the move back up into resistance and then bring it right back down and take them all out. Because where is any trader that's been going long in here? Where are they putting their stops? Just below the low of the day. As the market pushes higher, any trader that's getting long up in there, where are they putting their stops? Just below the low of the day. So all it takes is a few minutes of shenanigans by the computers, and they can get this market overly long and build a lot of liquidity just below the low of the day. Let's see what happens. Back for another round. And the shenanigans continue. So in my mind now, the highest probability is another push up into that overnight range. They are working awfully hard to get the market long right now. So they get that little push up and then it sells off. That is bearish to see. Can't be trusting these computers when they're making these tight little ranges like this. We got 122 people hanging out, 57 likes. Do we have another 20 people willing to support the pirate? Are you willing to push the thumbs up button? Tom B says, okay, I guess, fine. Okay, if we break the current low at 89, we're likely to get a little liquidation, squeezing these buyers. There it is. Boop, boop. Gotcha. Okay, so the more time that we spend below this overnight low and the more volume we bring in below this overnight low, the more bearish it becomes. If the market just had to dip down here to find buyers and turn around and come back up, the more time and the more volume they bring in down here, the more likely they need a further pullback in order to find those buyers. So let's zoom out and look for some potential levels of support. Okay, we're pushing into the first one right now, 49.86. Next is 49.80. And then 49.71. So as the market continues lower, we're going to watch those levels and see if we get support at any of them. Remember, a support level is an area where the market could flip and reverse, where the buyers could begin to defend and try to reverse the momentum. We can't ever know whether it'll work or not, but by watching what happens when we get there, it'll give us a clue. Okay, pushing back into that overnight low. Looking for sellers there. James says, what are you trading? S&P? Yes, sir. This is the S&P 500 futures. We can also kind of click over and see what's happening with the NQ. Why not? Ooh, okay. So NQ in a slightly different situation than the ES. The NQ had re-entered a previous balance area with the gap down this morning. What happened last time we re-entered this balance area? Straight move to the opposite end. What happened again this time? Straight move to the opposite end. What happened last time? A look below and fail that reversed us right back up. So that could happen again here today. That may be the low for the Q right there. So we're going to be monitoring for continuation lower. We're going to be looking for those sellers to keep smacking the market down. I would say if the NQ were to get back up in its overnight range, that would be much less bearish to see. Let's call it the current halfback at 17,630. That must hold as resistance for them to be able to continue lower. If they pass back through that halfback, they're heading right back up to the high, just like that. So let's see what happens here. Do we get more new sellers and continuation lower? Do we get a retracement to the overnight low? And what happens when we get there? DNK says, if you were in a trade, where would you move your stop to above the resistance? Correct. Yeah. At this point, if I was in a short, the absolute end of the world stop is the opening price. Because if they pass through that, they're going straight for the gap fill. But it's hard to know where exactly in the overnight range that resistance will happen. It could be anywhere in here. So as we print the B period here, the market has given us a new piece of information. It has done two things simultaneously. One, it has pulled the fairest price to do business lower, which is bearish to see. It has also pulled the value area down against the low of the day, which increases the odds. We need at least one more push to the downside. We're still playing tug of war here, but the probabilities are higher that we're going to continue lower. That sounds confusing. There's more likely we'll continue lower. Truman says NVIDIA had a 30-plus point sell-off. maybe not so sure of NVIDIA earnings tonight. Is NVIDIA earnings tonight? Well, you know what that means. Too many people bought calls. Too many people bought calls. And the market makers were like, fuck you very much. We're at 74 likes. Is there one single person out there that's willing to give me that thumbs up to break that sweet, sweet 75? There it is. Thank you, kind soul. Okay, so the market is now creating what is called a poor low. That is bearish to see. Generally, when we make a poor low, the first thing that happens is we push away from that poor low, looking for resistance. But once we find that resistance, it increases the odds. The market is going to come back through that low. So that is bearish to see, even if we get a bounce. Let's jump back over and take a look at the NQ and see where we are in relation to that previous bounce area low. Okay, we're getting new selling below that previous bounce area low. So what happened the last time we came down here? We just barely poked below and then turned around and head right back up. Now we're getting new selling below that bounce area low. That is bearish to see. Next major support around 17,475. If there's anyone new hanging out today that has questions for me, feel free to ask in the chat. This stream, as the tempo begins to slow down here, as the market gets less and less emotional, the stream will become more and more boring if you don't ask questions. So if you're curious about how I'm coming to these conclusions or anything at all, feel free to ask. Knapp says, why is the low poor? Well, the reason we consider the low poor is because the B period stopped exactly at the A period low. Generally, when they do that, it means they want to come back to that level again, right? If you can imagine, all the traders in the world won't instantly change their mind at exactly the same level, right? That just doesn't make sense. You need a little bit of excess, a little bit of a break to let, different buyers who are going to put slightly different levels in their orders step in. So if it reverses at an exact level, that's probably because bots want the market to reverse at that exact level, and then they can spend time above it. And the more time they spend above it, the more people start buying, the more people that are going long. Oh, look, it's bouncing. It's a double bottom. I got to get long, right? Well, where do they put their stops? Right below that low. So when the market comes back down through it, they get to take out all those stops. Yummy, yummy liquidity for the market. Well, Charles, what if you're wrong? What if the market turns around, it pushes up through the first resistance, through the second resistance, through the third resistance, and all the way back up through the opening price, and it leaves behind that poor low? Well, once it passes back through that opening price, I won't care about that poor low anymore. But as long as there's potential levels for sellers to step in above, I'm going to assume that they will step in and come back for that poor low, as that is the higher probability event to take place. Does higher probability mean a guarantee? Of course not. It just means higher probability. Abu, can you show the NQ? Yes, sir. Oh boy, spending time bringing in volume below that balance area low, increasing the odds. They got to pull back to the next node on the cumulative, which is down there at 17,470. That's the next spot the buyers are waiting. If we didn't have buyers here, we probably have to head down here and look for buyers down there. That is bearish to C. Trevor says, is your idea of a poor low exact or within a few ticks? So if it's half a point away from the previous low, that's poor. So if it had stopped a half a point above or it had gone a half a point below, that would still be a poor low. To have good excess, to have a good low, it's got to have at least a point away from the previous low. Chris Yee says, I have a working order for a short at the halfback. If I don't fill, oh well, too bad, so sad. But this waiting, will it fill, will it not fill, is making me anxious. So make a plan now, right? While you're feeling anxious, not a jump into a trade, right? Not a force a trade into a short at the low, which would be the silliest thing to do. But just say to yourself, what will convince me we're not going to get to the halfback? And if I'm convinced, what's my next trade? So for example, if we repair the poor low and then we start to head lower, what would you say to yourself then? We're probably not coming back to the current halfback. The sellers are in control. They're bringing in volume. They're spending time below the overnight low. We're probably not coming back for this level. And if we do, it'll probably create momentum up. Okay, great. Let me delete that trade. What's my next trade, right? What would I do next? Okay, well, I'd be looking for support somewhere around the 49.80 area. So let me watch and see what happens. Does the market get support there? Once it does, I'd be saying, okay, I know the sellers are in control. Where is the next resistance? And then I'd put in the order there. You know what I'm saying? So it's important as you're feeling those emotions that you don't force a trade. You don't try to smash the market sell button just because you're annoyed that you didn't get a fill. But you can help manage those emotions by making your next plan. By knowing what you would look for and what would be your signals to get into your next trade. Okay, so that was the repair of the poor low. So we're back to playing the game of, do we get support? Where and how much? First potential support is around 49.81. Looking for a bounce there. I would also say the level that I want the market to stay below now in order to remain bearish is the current halfback at 49.96. You could also use the overnight low at 49.94. Because we've spent so much time and we've brought in so much volume below this overnight low, if they're going to keep the momentum going down today, they should stay below that overnight low. If they start to pull back up in there, well, then they're going to reverse the market and head back up for the gap fill. So I want to see, if I'm remaining bearish, I want to see them stay below that overnight low. SC says, with the poor low earlier and value lower, the touch of the Global X low is a high probability short. Yes. Let me backtrack. High probability is tough to call at this point, right? Because the sellers are in control of the market. You know, whether it's going to be high probability now that we get up to the overnight low for the third touch, each touch it's less likely to work, right? We immediately found resistance there the first attempt. We came back, found resistance there a second time. So the third time, the probability is less. However, the risk is significantly lower. If you wanted to sell this low right in here, you don't have to take on a lot of risk. You can use a nice tight stop because it should hold. You know what I mean? So the probability of it working a third time around is a little bit less, but it's a much better risk reward now. So that's sort of the game. You know what I mean? Nor auto trading in the house. Good to see you, brother. He says, took a little break getting my system under control. That's what you should do. If you're ever feeling overwhelmed, if you're feeling out of control, the best thing to do is take a break. If you've been feeling out of control for a few months, you should take a break for a few months. Reassess, replan. All right, so every single signal that we have is bearish right now, with the exception of one. Can anyone tell me what is not bearish that we're seeing? Armando, ticks. There it is. Chi-Town and Chris, tempo. That is also coming into play, although I think it's a little early on the tempo call. But the ticks, you guys got it. So price is moving lower. Okay. We opened lower with a gap down. They tried to fill the gap, couldn't get it. Instantly moved to the overnight low. And now we've been pushing lower and pushing lower and pushing lower since we got below the overnight low. But what have the market internals been doing? They've been slowly working their way back up to that zero line. Now, as of now, they keep getting smacked down when they try to get above that zero line. So that's a sign. New sellers keep piling in. Every time they get a bounce, new sellers step in. They get a bounce, new sellers step in. But if they really want to keep this momentum going, they got to start to keep those ticks below the zero line. They got to start to build momentum downward, making lower highs and lower lows on the ticks. They also got to roll the advancers versus decliners over towards the downside, right? Or at least get it to flatten out. So what we're seeing here is that the futures are gaining momentum down, but the underlying shares haven't joined the party just yet. So that is increasing the odds we will find support at 49.80, and we'll have to monitor for continuation from there. We'll have to see if those ticks can stay down below the zero line. If not, we're probably getting ready to make a low for the day very, very soon. And I know it's confusing when I'm talking about different time frames, you know, bearish over the next hour compared to is it bearish over the rest of the day? But I must always keep all of that context in mind. As long as they keep getting smacked down, it's bearish for the moment, you know, intraday. But if they can't keep those ticks, keep that momentum going lower, it ain't going to last all day. They're going to find a low in reverse. So I want to be aware of that, even if the momentum is in the market right now. Jack says, is 49.81 support because it was a high volume area on 213? Let me zoom out and figure out why I picked that level. Correct. Yeah. So we're always looking for previous resistance to become support. Okay. So on the 13th, this area was acting as resistance. Then what happened on the 14th? It became support. So if this area became support on the 14th, no reason it can't become support right now. Okay. Same thing when I'm looking at the one below it at 71 in this overnight. That's where the reversal happened. This was the fairest price to do business the next day, the fairest price to do business the next overnight, and look at the low on that overnight. Very strong support in there. So that's another area to act as support. If you put a gun to my head right now and made me choose what's going to happen the rest of the day, I have a feeling one of these two is going to hold as support, and we're going to turn around and head back up into the overnight range from last night. But if not, monitoring for continuation lower from there. This is the thing about understanding with the daily context that we had a look above and fail of a balance area, and that the highest probability was heading to the balance area low. It tells us to be bearish, but it doesn't tell us exactly what the trip will be. It might take 4 days to get from one end to balance, or we might do it instantly this morning. It's hard to know. So I must just monitor each support level and see what happens when we get there. Falcon One says, have you used the ATR indicator? No, I have not. Joe says, I've been having a hard time determining the balance area in this distribution, even looking at the daily and weekly. Do not feel bad about that. It has been a very tricky one. It was not easy. So we could backpedal a little bit and figure out how I got here. So what we had was like a channel for a while, right? And then that channel broke and the market fell lower. Now, what we would have expected was that when it came back up, that would become resistance and we would head to the downside. But instead, what happened was, boop, we popped right back up to the opposite end of that channel. Okay. So from that point on, I was seeing it as a channel, and that FOMC day was just a look below and fail, right? So you got your channel and the market's trading in that channel, right? But then last week it tried to re-enter and it couldn't. So I realized, I forget exactly what day I switched my thinking, but there was just one day where I realized, I was like, it's not a channel anymore. It's become horizontal. And then I drew this box right here. Okay. So why did I draw that box right there? If we look at the highs right here, okay, this was like a little mini balance area over these couple of days. We broke out of that and we got momentum. Ran out of steam up here. Where did we come back down to? Back inside this previous balance. Barely touched it. Just wicked in there and then turned around. Where did we go? Right back up to that high. So drawing the balance area low here is tricky, right? You could have drawn it like this. This could be your balance area. You could draw it even bigger than that. You could have it be that right there. So I'm just using my intuition and my experience to assume we almost certainly will get here. I don't know that we'll get all the way back down here. So if I'm trying to give myself a framework to make sense of the randomness, this is a more realistic target, right? It was the highs from this area and it was the lows in here. So you could draw it all the way down there and that would be fine. You could have drawn it up there and that would have been fine. But this is just experience tells me it's probably closer to 49, 65, 70. Okay. The unfortunate thing about balance areas is there's no exact science to it. You got to just kind of draw it, see what happens, and learn. Go back afterward and say what worked, what didn't. And then you get better at the next one, and you get better at the next one, and you get better at the next one. But it's never an exact science. It takes a lot of intuition. Well, wouldn't you know? Another poor low. So they made another poor low, and they still haven't started any momentum lower on the internals. They still have not rolled over the advancers versus decliners. They still have not held the ticks below the zero line. So likely we're going to get more chop and grind here. But for the moment, it remains bearish. If we repair the poor low and we get the C period one more half a point lower, well, then there it is. Then now we're trending to the downside. So everything just got significantly easier. Thank you, market. Appreciate you. The internals are telling us we're likely to find support somewhere in reverse, but we can short any resistance at all below that B period low. If the market is going to continue trending lower for the next few hours or the rest of the day, they should continue to make lower highs with each TPO. So if the C period gets above that B period low, we know that trend is over and we're going back up. Pushing into resistance right now. Do they smack the market back down? Scooball in the house. Good to see you. Falcon 1 says, oh, he's answering somebody else's question. James says, unreal. I buy, it drops. I sell, it pops. Well, here's the trick. It's gonna sound like I'm being glib, but when the market has momentum down, don't buy. Don't think about buying. Don't look for places to buy. When the market has momentum down, just sell. Okay? That's step one. Never fight the momentum. As long as it has momentum down, which it still does, don't buy. Don't even look for buys. That alone will make trading significantly easier because it is harder to figure out where it's going to bounce when it has momentum down than it is to figure out where resistance will step in, right? So by taking away the harder thing to do right out the gate, you'll make it easier on yourself, okay? The next thing you want to say to yourself, once the market has momentum down is, I'm not going to short at the low, which is where everyone feels like getting short, right? Everyone watches the market and it's bouncing and it's bouncing and it's bouncing. And then it finally breaks and they're like, okay, shit, I got to get short right here. You don't want to do that. You don't want to get short at the low. You want to get short in resistance on the pull back up. This morning, the market has given us like 10 different entries where it has pushed up into resistance and instantly been smacked down. So that is the trick. Step one is ask yourself, what is the momentum of the day? Is it up or is it down? Only take trades in the momentum. Once you know what trades you want to take, wait. If they're shorts, wait for it to push up into resistance. The second you see it, get in the trade. Don't wait around. And that'll get you on the right side way more often. James says that's what I'm doing. Just to throw an idea out there, after I'm done live streaming today, after the market closes this evening, go back and replay this live stream. You can just kind of scan through very quickly. Wait until I put up a red banner, then watch the levels that I point to as resistance. And imagine all you did was go short at one of those levels. Now, a lot of times it may not have reached the level, right? I may have had 2 or 3 potential levels marked, and maybe it only got to the first one, right? But just ask yourself, if you'd have only done that, waited for the banner to go red, and then just gotten short at the resistance levels, how would it have worked? And just watch it play out. And I think that framework may help you to rethink things come tomorrow or the next day. Because if you feel like you've been selling at resistance, every single short should have been profitable so far today. Because every single resistance has held and continued lower. And it is even as we speak. So if you think you're selling at resistance, but you're getting stopped out, you're either not picking resistance levels that are working and you want to rethink how you choose your resistance levels, or you're trading with too tight of stops. And you want to rethink the size of the stops that you're using. Where are you getting out of the trade? And if you go in at the end of the day today and you do that assessment, you'll probably have a slightly better understanding come tomorrow. And if you do it again tomorrow, a better understanding the next day, and so on and so forth. And you just get a little tiny bit better every single day. And that's how you progress. John Q says, yeah, I'm trying to not care about catching the reversal and just waiting to buy after the reversal. Absolutely. That is 100% the way to do it. If you haven't felt like going short today, maybe right now you're thinking it's too late. The tempo has slowed. Those ticks don't have momentum down. Look, they still don't have it. Okay, I can't short here. It's too late. I missed the move. So I want to be a trader that goes long once the move is over. If you just wait for cessation, okay, if you wait for the B period, or for the C period to get above the B period high, once we get cessation, we are almost certainly, with almost a guarantee, heading back up to this node around the opening price. And I would say even probably heading for the gap fill. There's plenty of money to be made in between here and here, or here and here, if you wait for that. Whereas if you try to grab the low and it keeps going, you're just going to get hurt. So don't try to get the best entry in terms of price. Try to get the best entry in terms of the probability of the trade working. And over a long run, you'll be way better off. It goes counter to human nature, right? We all want to buy the lowest tick of the day. That's just human nature. We want to be a genius. We want to nail it. We want to get long and then have it instantly turn around right at that moment. But when you're doing this day in and day out over and over again, you will find that is very, very hard to do. Whereas waiting for cessation and then grabbing a piece of the move that is significantly higher probability, well, then you're much better off. And by the way, we could get cessation. The C period could come up above the B, and then we come right back down and we could buy this support right here. And then you're basically getting just as big a move, but after the probabilities have changed in your favor. Adam Lee says, so looking above the value area high for a short entry? No, sir. As I've said, if we get back inside the overnight range, the momentum down is over. That's it. The sellers took it as far as they could take it to the downside. So what I'd want to wait for then is clear, unquestionable resistance. So sure, if we get resistance in this node around the opening price, that is technically sellable for a rotation back down to the point of control. But boy, oh boy, do I need to see it and be sure of it at that point because we have the gap above. But none of that matters right now as we are still one time framing to the downside. And until that one time framing is over, the higher probability is we're heading for 49.80. There is nothing in day trading that is more valuable than recognizing momentum. Who is in control of the market and how long will they remain in control? Sellers are still in control, so don't worry about anything else until they're done, until we get cessation, then start thinking about the next thing. Plenty of money to be made to the upside after the momentum down is over. Adam says, what do you look for as a confirmation the momentum has changed? Well, the first thing we're looking at is the ticks. So they have been telling us all morning the momentum is going to change, right? The fact that we can't keep those ticks trending lower is a sign there are buyers stepping in. The final confirmation is a higher high on the 30-minute time frame. So if the C period can get a point above the B period high, that's the official signal it's over. We call that cessation of the trend. Moment of truth. This is your last chance to go short with minimal possible risk if this momentum is going to continue. John says, remind me of the charting system. So the one on the left is the market profile chart. That's a TPO chart. The one you're seeing back here is market internals. And the one that I keep popping up here is the Bookmap. So for the market profile, I'm looking at price action. Where does price go? How much time does it spend there? And how much volume does it bring in? For the Bookmap, I'm looking at where the liquidity is currently sitting. Excuse me, is currently sitting in the market, right? Are there more orders above or below price? And then I'm also watching these stops and icebergs to see, is it machines artificially making moves, or are there larger players getting stopped out? And then the market internals is sort of the under the hood look at the market, telling me whether the underlying shares are moving the same way as the futures. James says, I sold the dead spot bottom. Bears are in control. Yes, sir. Bears are still in control. Would I have sold the low? Of course not. I would have waited for it to pull back into resistance. Could have sold here at 49.87. Could have sold here. Literally, you could sell right now, and you would have a much smaller stop than whatever stop you're currently using, having sold the low. If I think this support at 81 might be where the market runs out of steam, I don't want to be shorting right there, right next to it for a tiny little profit with a massive, huge amount of risk. I want to be waiting for a pullback and get in where there's very little risk with a much larger reward. Remember, not every trade always works. But if you keep your risk minimal and you're right more than you're wrong, you will be a profitable trader. It's the emotions of trying to chase shorts at the low or trying to go long before cessation that will cause you to be offsides again and again and lose more than you win. Here we go. Moment of truth. They got to keep it below 93. But if I had to guess, I'd say we're about to get cessation. What could have been the clue? Momentum. They couldn't keep those ticks below the zero line, and they've been getting slower and slower with the tempo. So slowly but surely, the sellers have been running out of steam down here. And this is their last chance right now to smack it down. For those of you playing the home game, you can get short right here with only half a point of risk. Now, what's the probability the trade won't work? Well, not very good, and there you go, cessation of the trend. So that tells us the momentum to the downside is likely over, and we are going to begin the process of two-sided trade. The market will now begin to rotate. So we will likely push up into this resistance up here around the opening price, and then come back down, push down, and then come back up, push up, and then come back down, push down, and then come back up, push up, and then come back down, over and over and over again, maybe for the rest of the day. Now, I would be cautious if I was looking to short up here above the opening price. Whilst that is a good area risk-reward-wise to get short for a move back to the fairest price, there is still a gap that needs to be filled today. So that is like a magnet that is tugging on price there. So nothing wrong with getting short, but just make absolutely sure you're seeing resistance before you get into that short. I wouldn't blindly put in limit orders here today. I would now blindly put in limit orders near the low of the day, but not up at the high because of that gap. So as a recap of everything that's happened today, the market opened with a gap down, giving us an insight that the sellers were likely in control. They could not fill that gap, further confirming the insight that the sellers were in control. They then passed through the opening price and got below the overnight low, further confirming the sellers are in control. They then moved lower, spent some time, brought in some volume, moved lower, spent some time, brought in some volume, moved lower, staying in control, continuing to make new lows. Now that momentum is over, that increases the odds. This was as low as we could go. So now we got to go sideways for a while. Let's see if the NQ has gotten cessation. Ooh, they're right on it. So the NQ, same thing. They looked below this previous balance area low. As of now, they're still trending. So it is still bearish. And the more time they spend down here, the more bearish it becomes. But all they need is just one more point to the upside. And then it becomes a look below and fail. That increases the odds. They're heading back up to fill their gap. Market is very emotional this morning. Lots of traders FOMOing in and getting squeezed all morning long. If the NQ does get cessation now, I would not look for resistance until you got back above the opening price, as you got a lot of low volume in here. They are almost certainly going to backfill that. Thank you to IEMW1N for the sub. Appreciate you. Ooh, we got 94 likes. Can we break 100? Is there 6 people that have not hit the thumbs up button yet? Willie says, at what point would I get long? If we got back down to 49.84 and we were finding buyers, I would get long there. But, you know, we got to get down there. We got to find the buyers. And preferably in a perfect world, I'd like to see a push up first. I'd like to see us spend a little time up here and pull this value area back up, because I never really enjoy going long at the lows with value still up against the low of the day, because as long as that blue box is up against the low of the day, it is a sign we need one more little poke to the downside. So if I was going to get long, I'd have to have a wider stop. So I'd really need to be confident that we're finding the support down there. Otherwise, at this point, the market gave me tons of opportunity to make money to the downside. Now it's time to sit back, let the, short-term traders get squeezed, spend some time bouncing around in here before a good opportunity will present itself. It's important to remember you don't want to try to jump into every single possible trade all day, every day. You want to wait for the really good A-plus setups. Right now, there aren't any really good A-plus setups for rotation. If the value area moves up, the lows would be an A-plus setup. If the market pushes up above the opening price and it's clearly getting resistance, that would be an A-plus setup. But neither of those have happened yet. So the better thing to do at this point is just let the market do whatever it needs to do until those become an A-plus setup. Until the market-generated information confirms you should be shorting or you should be longing. But for now, caution is called for. The market gave you a great chance this morning. Gap and goes are clockwork. They're wonderful opportunities to go with the momentum. But once that momentum runs out, there's going to be chop. There's going to be two-sided trade, and that is much, much trickier to trade. And so you say to me, well, Charles, what if because we got cessation, I just want to get long for that move up? You can do that, but what is your target and what is your stop? You can't put your stop anywhere in here because they could easily rotate right back down. And it's hard to know exactly where to put your take profit. Let's say it was the opening price, because you're almost certain we're passing back through there. Well, then what is your risk to reward on that trade? Say you wanted to get long at cessation, targeting the opening price. If your stop is down below the low of the day, you're taking on more risk than your potential reward. So maybe today that trade would have worked out and it would have gone straight up to the opening price and you would make money. But if you took trades like that every day, day in and day out, every time you get cessation, you just automatically go long, over a series of trades, you will not make more money than you will lose. So that's where you've got to be disciplined with your entries. And if that means you never get a pullback into support and it immediately pushes higher, oh well, who cares? Let that trade go. Look for the next one, right? That's the way to think about trading. So if I had to make a plan now for what it would take for me to get long or short, as I've said, clear resistance above the opening price could get me short for a move back to 49.92. Or if we spend enough time up here to pull the blue box up, I could get long down around 49.84 for a move back up. So on the long trade, my risk would be a couple of points. My reward, well, there you go. My reward's even better now. And same thing up here. Risk, reward. Don't diddle in the middle. It's much harder if you do that. I assume we just got cessation on the Q. There it is. So I'd say same thing for NQ, probably heading up towards the opening price. Then it can be traded as rotation. All right, guys, any questions for me before I say goodbye for the day? Thank you, Willie T. All right, with that, I will say goodbye. As I've said, I believe the market is rotational. We are likely to go sideways inside today's range. Be cautious with shorts at the high until the resistance is absolutely confirmed. With that gap up, they could head up and fill that gap. But I believe a long trade at the low is a higher probability now that we popped that value area up. So this is what I was talking about. When that blue box was up against the low of the day, I would not want to be going long. But now that we popped it up, I'd feel much more comfortable getting long down near the lows for rotation back up. The market is rotational. Act accordingly. For members of the brigade, I will see you tomorrow morning. Goodbye. Bye-bye.